Pay your taxes and dodge those axes. I am your host for the last time, Christopher Paul Dugdale, MDMA. We are Duncanville High School in these United States, and today is May 23rd, 2021. And on this date in history, the police killed Bonnie and Clyde. Uh, there was no, they didn't use too much violence, just hundreds of shots fired into the vehicle. But it was in Louisiana, so, no one really noticed. That's some kind of shot at Louisiana, but I'm not sure where I'm going with that yet. Also, on this date in history, I have a relative who was born who didn't kill themselves. That was my sister Rachel. My sister is 36 today, so happy birthday, Rachel. Also, it's my godmother, Sonny. Her birthday is today as well. Okay, and Sonny is 60. She's 60. She's 69 today, which is appropriate for her. And then also on this date in history, my Uncle Dave was born, although he did violently kill himself in 1998 on March 11th. So if he were alive today, well, it'd be really rough since he was cremated. Well, I'm going to end on that note this year. Everyone have a great day. Now we're going to talk about something super exciting in no way whatsoever. And this will be basically how to do taxes. Now, I'm going to give you some basic information. And the truth is, it's so user-friendly right now, it's pretty easy to do all of this. But I still want to look at this. So, what I'm looking at right here is a pretend earnings statement for someone. Okay, this is basically the something attached to someone's check. It tells how much that they're making, how much they paid all year. And I don't know if you're familiar with all of these things. It'll be on a normal one of your checks. But let's look at required payroll deductions. So the employers are forced to pay taxes from each one of the employee paychecks. So they take out taxes, and they might have to pay taxes on you also. So depending on where you live, you'll have to pay federal, state, and sometimes city taxes. Okay. Now, in the state of Texas, there are no state taxes, so that's one place where you save money. And I'm not aware of any cities in Texas that have any city or local taxes as well. Now, if you live in New York, and Manhattan, you're going to pay your federal taxes to the government. You're going to pay your state taxes to the state of New York, and then you're also going to pay some taxes to the city of New York as well. So they kind of get you in three different ways there on their taxes in New York. Okay. In addition, employees have to pay Social Security tax. That is your FICA. Okay. So they'll take out money for Social Security. Everyone has to pay Social Security except for teachers, oddly enough. Okay. You will also pay Medicare each month as well. Okay. So, voluntary payroll deductions. So these are things that you have an option on. This might be health insurance. Okay, so some places have health insurance for their employees, and some places don't. Retirement savings. Okay, you might put in some money so that you can make more money at retirement. Okay, union dues. Okay, in several states, you're required to join a union, and you'll pay about 3 to 5% of your salary for union dues on a monthly basis. If you live in the state of Texas, you have the option on joining the union, so you may not pay taxes. Okay, charitable contributions. Sometimes there's things at work that you can give money to that help out certain charities. Okay. By the way, one of the things I left out under required payroll deductions, if you have a child with someone and they have custody of them, you may be required to pay child support, and that's something that is a required payroll deduction if that is something that you're set up to do. The courts will basically require your company to send in money for your child support. So, Social Security. This is also called the FICA tax, and this gives benefits for people in retirement. This might be for people that are disabled, and also it has a benefit for people that are out of work. Okay. Medicare, this is something you pay into so that when you become 65, then you will have health insurance. Is it a great health insurance program? It's better than nothing. Okay, but this provides this for the worker and any spouses of the workers as well. Okay, so you get to start using Medicare at the age of 65. Okay, gross income minus deductions. Okay, so the last page was looking at all the different deductions you have. So after you pay your taxes, your Social Security, your Medicare, your child support, your union dues, your retirement investments like your 401k, after you do all of that, you have what's called your net income or your take-home pay. This is the money you get whenever you put in. This is the money that's actually on your check. Okay, and this is what you have to live off of. So that's the difference between gross and net. Gross is what you get paid, and then after the deductions is your net income. So this is kind of what a W-2 statement looks like right here. Okay, if you look up at part A on the top row, you see the employee Social Security number. Okay, there's also underneath that you have the tax ID number or the employer identification number, the EIN or TIN, just depending on where you're working with. And underneath that, in Part C, they list the employee, the name of the place where you work, and their address. Now, for a lot of companies, under Part D, they will have a number, which is a combination of numbers and letters, and normally you can enter that in if you're filing online, if they have that number, and many companies put everything there so that when you type that in, it downloads all of this for you. Okay. In Part E, they have your name and your address and all of your information. Okay. Then over on the moving over to the right, number 1, you have your wages, tips, and other compensation. Okay. So this is any type of bonuses you receive. This is how much you receive from the company, or tips that you receive if you are a waiter, or a few other different professions will also get tips. Okay, so that's your wages and how much money you made. Okay, on the right there they have your federal income tax withheld, and this is how much money they held out of your checks. Now when you get a job, you're going to fill out a W-4, and you're going to figure out how many people you want to claim. If you are single and you have no one to claim, if you claim single and 0, then the odds are you'll get a little bit of money back at the end of the year. If you claim single and 1, it might be close and you might have to pay taxes at the end of the year, and there's no way out of that. Social Security wages, this can be different than number 1. Normally 1 and 5 are the same here, Social Security and Medicare wages, but sometimes they're not. So anyway, now number 4, Social Security tax withheld. Again, this is money that goes towards your retirement whenever you get older. Okay, and number 6 is your Medicare tax withheld. Okay, Social Security tips and allocated tips. That's something I've never dealt with, so I'm sorry about that. 9 and 10 are not a lot of anything I've seen before. Number 11, certain type of insurance plans sometimes will come up under that. So between 11 and 12, A, B, C, and D, depending on what kind of insurance you have, that could also affect these sections as well. 13 talks about whether you're on a retirement plan or just exactly how your company's set up. All of these things are things that you don't fill in, but you know, if you're having to type everything in by hand. Now, if you look at number 15 and 15 through 17, okay, that has to do with if you have a state tax. So if you live in several different states, you will pay a certain percentage of your money in taxes, and that does vary based on how much you make and what state you're in. Okay, and then 18 and 19 have to do with if you have a local tax. Again, depending on which city you're in, you might have your federal, which is number 2, your state, which is number 17, and your local, which is number 19. Okay? But for those of you staying in Texas, you won't have state and local taxes to pay. Okay? The W-2 that you get is required to either be sent to you by your employer by mail on January 31st, or you have to get access to it, whether it is through your whatever employee portal that your company uses. So if you log in to find out your information, then you would go into that same system to find that out. But they have to email it to you. They have to do something to get you that by January 31st. So if they don't get it out on that day, they could pay penalties. Okay? Make sure everything is correct. Sometimes people make errors. Okay? Again, look at all the different categories. If you have check stubs, this should all be pretty consistent. Okay? But if you look at 2, 4, and 6, it's how much was withheld in taxes. And also the same thing with Section 17 and Section 19. This right here represents a form that you'll get for any money that you have in checking. Now, there's a bare minimum that you have to make in interest in order to have to claim it. And if you're filing this online, either through TurboTax, which is free, or through the IRS, which is also for free, then this will guide you through each step of this. But right now, the majority of banks are offering about 0.01% in interest, which means that if you have $1,000, that you would get about 10 cents a year. Okay? If you have $1 million, then you're looking at getting somewhere around 10,000, or not 10,000, not even 1,000, about $100 a year. So right now, it's not a great investment to keep all your money in a savings account. But anyway, so all this information's here, and it's pretty easy to find. If you're using TurboTax, it tells you which line to use, and also where to get the tax ID number. Okay. This is sent to you by your bank, and they are also required to send it out to you by the 31st of January. Okay. How much money you made on your interest, on your investments. So you might receive this not just from certain types of investments as well. You have to pay your taxes. I think you have to have, as long as, if you make over $10 in interest, then you have to pay taxes on your interest. And the government does receive copies of all your W-2s. Okay, filing your taxes. Okay. You generally have to file taxes by April 15th. Last year in 2020 and this year in 2021, you've been given extensions. So make sure you figure out long before April 15th if you have extra time and then exactly how much time that you have. If you don't get it done, then you can file for an extension. Okay, now you can hire an accountant to do all this for you. Okay, that is normally a more expensive way to do it, but depending on how many deductions you have, if you have a business or anything along those lines, it might be something that helps if you have someone that knows what they're doing to pay your taxes. Okay, fill out the forms for yourself and send them in. That's another way of doing them. You can do them on paper if that's something you're more comfortable with. But the odds are people that are born after 1980, 1990, that they all feel much more comfortable with the computer and able to figure out most of these things by themselves. Okay. 3, you can e-file. This is where you electronically file your taxes. Again, up until you make a little bit over $50,000, you should be able to. Now, doesn't count if you have kids, if you're married, if you own a home or anything like this, but you should be able to, without a problem, if you make less than that, to file your taxes online either through TurboTaxes or through the IRS. Tax terms, okay? you voluntarily file a tax return. Now, if you don't pay your taxes, then you can't. They can go after you, and that is something that they're probably going to start doing more here in the next few years. In fact, they have talked about increasing that. Tax evasion is not reporting income or not paying your taxes. Those are things that can lead to fines or potentially even time in jail for not paying your taxes. And the government is not very tolerant of people that don't do that. If there's there's a such thing called an audit, and this is when the IRS wants more information about your return, and they might do an audit where you just send in more information by mail or online, or they might meet with you and look over all of the different things that you tried to deduct, and they find out, wait, you don't have 43 children, you didn't lose $8 million in your business, They verify all those type of things, and then you generally will have to pay a penalty if there's anything you had hidden from the IRS. I mean, in some cases, though, people can go to jail. This is what one of the paper forms looks like. Again, you're probably not going to see most of this, but if you do, it's not that bad to fill out. You have most of the information here on the top side of the line here. The truth is, if you are living on your own, you will claim yourself as a dependent, or you can put in that someone else is able to claim you. Okay? So that just is based on if you live with your parents and they're paying everything, then the truth is you are not going to file for yourself. Okay? Because your parents are paying the majority of your bills. Okay? So you see standard deduction, then underneath that you have dependents. Well, above that you have age and blindness. So if you've been blind from a certain time period, then this can also affect how you do your taxes. If you look at dependents, it looks at do you have any children under the age of 18? If so, their name, social, their relationship to you, and if you have a child tax credit. And that's not something I'm going to go over at this time. Okay. Number one, you get that from the W-2s, and that's something that we looked at a little bit earlier. Okay. There are some things that you can do to reduce your taxable income. Okay. Most common are IRA distributions. So let's say that you make $50,001, and once you make $50,001, your tax rate is 20%. But if you make $50,000, it's 15%. So if you put some money into an IRA, then you can lower down the amount of income that you have so that you're paying 15% instead of 20%. It's just a way of making sure that you have more money at the end of the year. Okay? But then again, if you put it into an IRA, it's something that you may have to pay taxes on later. Okay? But keeping on going here, right over here you see the standard deduction over here on the left-hand side, and that's $12,400. Or if you're married, then it's $24,800. So they give you double that. So really, if you look here, all the instructions are located on here as you go through the form. This is a more complicated way of doing it just because I'm showing it to you here on paper. But unfortunately, there's not an easy walkthrough I can take you through from TurboTax that shows all the same information. But if you have your W-2s, if you have your 1099, your 1099s for your interest, then this process shouldn't really take you more than about 15 to 20 minutes. And if you're doing it online, it might take less time than that. So I hope this helps a little bit, but taxes are pretty easy and straightforward. Now, if you own your own business, then it becomes a little bit more complicated. So if that's the case, depending on several factors, you might have to hire an accountant or hire a CPA to do your taxes. But you'll find that you can really do your taxes on your own and not have to pay a company like H&R Block to do your taxes for you, or another type of tax group like that. Remember, if you file it yourself, you'll have access to more of your money, and the earlier that you file your taxes in the tax season, so closest to January 31st, then the quicker you'll get your refund. So You can go to places and get advances on it, but you'll normally pay them a couple of $100 to get your money maybe a week early or maybe 2 weeks early. So if you can, help yourself out here. Hey, thank you for another great day. I hope you all had a great day. Be safe. Don't cocaine. Don't AIDS. And don't COVID. Even if you think that you're fine. If you see someone COVIDing out, go up to them and go, hey, give me full blown COVID like you. And then you take the vials of COVID and you pour it in your eyes and in your mouth and then inject it into your directly into your spleen, which would be very difficult to do. Don't do that. Okay? I'm your teacher. I will write you up if you do it. So please don't. Okay? So this is Doug Dell, and I'll see you on the other side.